Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
On today's economic calendar at 4 o'clock South African Standard Time, the USA is set to release its pending home sales report, which could have a huge impact on the market. But that's not all. We also have an exciting opportunity for you to win a limited edition branded mug. All you have to do is like this video and comment your answer to the following question. Between which parties is the interest rate charged? A. Central bank, commercial banks. B. Commercial banks and consumers. Or C. Venture capital startups. Don't forget to subscribe to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers and T's and C's apply.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the US dollar has been on the back foot for the past 2 days as global financial markets regained some stability on hopes of avoiding a banking crisis. The dollar index has remained flat in early Asian trading, despite a rise in US Treasury yields, which is also the result of ebbing demand for the safest assets. Elsewhere, the Australian dollar has slipped by 0.18% after a reading of Australian consumer inflation slowed to an 8-month low, indicating a pause next week in the Reserve Bank's rate hiking campaign. Let's shift our focus to the analysis for today. The specific currency pair has been stuck in a sideways market since last week Wednesday, and if we break out of this consolidation zone and get a close below that 1.614 level, we could see a sell-off all the way back down to that next primary support. Moving on to Wall Street, major US indices had a negative close as technology stocks fell due to the rise in yields. The Dow Jones Industrial Average lost 0.1%, the S&P 500 lost 0.2%, and the Nasdaq fell 0.5%. However, Alibaba Group's shares outperformed most of the market, jumping 14.3% after the e-commerce giant announced its plans to split into 6 units, with potential fundraising and listings for most of them. Let's shift our focus to the Dow Jones analysis. The US 30 is currently boxed into a tight spot, and we are at a critical level for a big spike. If we get a break of this primary resistance and a close around that 32,700 level, we could see this index rally. However, if we get a close around 32,300, we could see a sell-off all the way back down to that next primary support level. Moving on to commodities, US crude oil and gasoline stockpiles showed big weekly declines last week, reported by API. US crude inventories fell by 6.076 million barrels during the week, ending March 24th, pointing to a potential supply shortage. Looking at our analysis on crude oil, it is still extremely bullish, and if we can get a close around at $74 a barrel level, we could see a rally all the way back up to that next resistance at $76 a barrel. Lastly, let's talk about gold. With the recent US banking crisis, the gold market seems to know something that other markets, financial regulators, or even the banks themselves don't. Gold futures were back knocking at the $2,000 an ounce door, even as the crisis in US banking seemed to abate, with a closely watched hearing in the Senate not discussing a widening contagion. The yellow metal's behavior suggests that investors don't think the mini banking crisis is behind us. Taking a look at our analysis on gold, the yellow metal is still extremely bullish, and a close around that 1976 level could solidify this momentum and see this commodity rally all the way back up to 2000.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.